And joining me on the podcast and on video is Alan Green, CEO of Brand Communications. Al.
Good morning, Just. How are you?
I'm all right, yes. I'm just, the markets don't know what to do they? It's almost like saying, do you know what I didn't like? I don't know about you, but I don't know if it's that Rose Garden speech by Keir Starmer. And I'm thinking, why are you putting a downer on everything? It's like, you come in, there's this realization that maybe there's some stability now in UK politics, in the economic backdrop. And yet he's saying, oh, some bad times to come. And doesn't he not understand that business confidence is, it attracts investment where uncertainty doesn't.
I think he's taking the approach that he's going to blame everything on the Tories, the Tory administration for the last 12, 14 years or however long, and he's going to blame everything on them, paint a bleak picture, and then if he can improve on what he says he's going to deliver, which he may be able to, then of course he can claim credit for that. But I think I agree. I think he's got to talk the economy up. He's got to be a lot more bullish than he is currently being. But I suppose he's inherited what he's inherited. But I don't ever recall an incumbent or incoming administration being so scathing and offloading all the blame onto the prior administration beforehand. They just seem determined to blame everything on the Tories, which is fair enough. The Tories had the chance and they blew it spectacularly. But I think Keir Starmer is being overly negative, but I suspect that's the strategy he's employing.
Yeah, it's almost like, when a new CEO comes into a company and the company hasn't performed very well.
Yeah,
it's almost like they kitchen sink it and get all the bad news out and paint a really bad picture. Maybe under promise, over deliver. If that's the case, that's fine. But what you've got now until October is businesses worrying about investing in in new infrastructure maybe, or people or whatever, or taking on new projects because they don't know what's in the budget. They've been scared now, and that's not the kind of thing you should be doing. I think you should try and lay a confident a foundation for business rather than say, oh, it's going to be painful, a lot of pain is to come, and it's going to get worse before it gets better. What's you can be cautiously optimistic. You don't have to be just doom mongering, because that doesn't help anyone at all. And I say he is, I think, hopefully painting this picture, like you said, it's worse than it is. And then he'll say, oh, look how well we've done. We did say it was going to be bad, but we've actually outperformed. That's hopefully what he's doing. But it's just a little bit see-through. Yeah, but I mean, if you look at the this is the AIM shit. It's struggling a little bit. If you see this, it's quite. We've had this. You often have this when it's rallies. They over rally and they come back.
Over rally,
see
sharp
here,
contraction.
Yeah, and then this level here, which is previously hit, which is the previous high, previous rally, which is what 762, and it's come back to that, bounced off that. That was the big global sell-off day where it was the Japanese raised their interest rates, the carry trade happened and everything sold off. But it's come back into this range now, which is nice. So maybe we'll see. I don't know if this is going to go until October now. I don't know what's going to happen here. We got another.
Well, I think we've got some major macro drivers on the horizon, haven't we? We've got the US elections, of course. That's going to be the focus point, I think, for the markets going forward. And of course, closer to home, we've got the prospect of hopefully some further interest rate cuts. So if that happens, I think those will provide further drivers for the market. Either way, I think we've got enough to possibly provide us with a centre rally this year, but it's early days. But I think everything is in place to potentially deliver that, provided, of course, we don't get any further shocks from Keir Starmer and co.
Yeah, and it's looking like the Fed are going to reduce interest rates anyway next meeting, which is not long. Where are we at? September now. It's not long off. What is it? 17th, I think the Fed interest rate decision is. So a couple of weeks. Okay, what stocks are you looking at?
Okay, so 3 stocks for you today, Just. Firstly, we spoke about this company a little while back. A company called Facilities by ADF. Of course, they've had a pretty steady old year, but I do like this company. They are contractors to the film industry. They provide production facilities, support vehicles to the TV and film industry, and everything from makeup production on offices, artist trailers, honey wagons. Those are that's the colloquial terminology for toilets. Generators, driving, dining, and further sort of tech vehicles for managing the film set. But they had a pretty good year last year. They grew revenues to nearly 35 million from 31.5 million previously. EBITDA about the same, 7.3 million from 8 million previously. They were impacted heavily last year by the Hollywood writers' strike, and that really cost them heavily, but they've recovered rapidly since that point. And this company has been involved in all sorts of productions, and I follow the chief exec quite closely, and he often posts images of film sets where the people they're currently working with. These include, of course, Slow Horses, the fantastic Apple TV series with Gary Oldman, Star Wars, The Gentleman, Rivals, The Diplomat, many, many, many more. But a real step forward for them this year. That they set their stall out to become a one-stop shop solution to deliver solutions for film and TV production, and they've taken another step in that. They recently launched and succeeded in getting away a retail offer, a placing in a retail offer, raised 10.5 million quid. Two shareholders also raised a further £1 million from selling 10 million in shares to acquire a company called AutoTrack, and this is a company that provides portable roadways. They're the largest privately owned supplier of panels and road panels to the film, TV, festival and outdoor event industry, both in the UK and overseas. The company has generated a lot of cash in its own right. 8.5 million was the turnover to December last year. Underlying EBITDA of 4.3 million, and this is a really good fit for the company. Obviously, Facilities by EDF turns over nearly 35 million, but this will embed nicely. It will be earnings accretive for the company, and it's had an awful lot of support in the raise. And this was done at 50p, so pretty much midway in terms of the share price performance for the year. But the raise was also supported by two institutional investors who invested a combined total of 7.6 million. So I think this company's got a really exciting future. They've got a real growth strategy that they're delivering on, and we're seeing this company now with a market cap of 42 million. Obviously, with the additional shares issued after the AutoTrack acquisition, that will change somewhat. But either way, with a further 8.5 million coming to the bottom line every year, or 4.3 million coming to the bottom line. Obviously, I'm sure there'll be economies of scale that they can apply here and work to further build and improve profitability for the company going forward.
Yeah, I think it's a great fit, and it's been under the radar, this company, a little bit, because it came to the market not long ago, and well, in fact, doing this sort of a bull market pretty much, and then you had the writers' strike. So they've had two issues they deal with outside their sort of remit. They can't do anything about that. But they say they still turn a profit even with the writers' strike, and so less productions coming to the fore and to deal with. But if you look at the forecast here, you have to adjust, of course, for like I said, the shares in issue. But the forecast in the next 2 years, so that top line growth of 40% pretty much to 48.6 million. And another 40% on top of that for 2025, and then 15% after that. So that's amazing. By 20 years, it was 77 million, and looking at a net profit of 12 million. I think this is if they achieve that, this company will be severely undervalued. Because I said, and the margins are also looking. They're looking at net margins of 10 for next year, 16. And 16 for the next 2 years. So the great margins, and I think they're doing very well. So yeah, I think it's one to watch. But as I said, it's been under the radar because it's not long listed. And like I said, the first year they didn't blow it out of the park first year because they were hit by the writers' strike. But now
the writers' strike.
Yeah,
the writers' strike.
So,
it hit them badly, but it's a very profitable business, and once you get your costs sorted, it's like anything. If you're embedded, we've spoken about other companies who become embedded and the go-to people within that particular industry. Facilities by ADF are very much that company for the TV and film industry. And the names that they work with already, they are very much the go-to people. So, a real
Yeah.
chance
Oh,
to.
if you look at if you look at final results, I mean, it's like everyone from Netflix to Amazon to the BBC. That's who they
Yeah,
work for,
yeah,
But
yeah.
there were less international big films being done because, of course, the writer strike. So they did sort of pivot to uh, tighter margins of contracts and shortening contracts, which weren't as profitable. So it affected them, but they still made a profit though, and even in that, in that against those headwinds. So
Oh,
yeah,
yeah, yeah,
and I think
yeah.
it's good raise it 10 million. They're really, I said 40 million market cap. They're really 10. I mean, it's a lot easier to do fundraisers if it's a project that's or company that's earnings accretive rather than just
Mm.
doing a fundraise to keep the lights on because no one wants to stand behind that. But this is obviously, like I said, straight away they're acquiring a profitable company.
It's an
Less
earnings
than five
accretive.
times. Yeah, less than 5 times EBITDA as well. So,
Yeah, yeah,
it's a
yeah.
decent valuation. Cool. All right. What's next, Al?
Okay, so we heard from Blencowe Resources this morning, and Blencowe, of course, I've spoken about beforehand. This is a great little company, very modest market capitalization, valued at just 12 million. The shares are currently trading at 5.4p. This is the company that owns it's a tier one graphite project in Uganda, which is a very benign regime in Central Eastern Africa. And the Orme Cross Graphite Project that the company owns, there's an estimated 2 to 3 billion tons of graphite near to surface. And when I say near to surface, you could, in some areas, go across with the rake and actually rake the stuff out of the ground. And it's considered to be premier grade worldwide. It has a 21-year mining license awarded in 2019. Strong government and local community support, a lot of involvement with the Department of Mining within the Ugandan government. Currently, the company is currently in the middle of the final stages of bringing it into production with a with a definitive feasibility study, which is currently underway. But the company's already been endorsed by many sort of major graphite manufacturers throughout the world. Plus, it also has received a non-dilutive $5 million grant from the US International Development Finance Corporation. And this is an arm of the US government. So if ever you wanted validation of a project, I think that's the way to go. This is non-dilutive. And what the company have done as part of their pre-feasibility study process and now the DFS process, they have taken samples, and those samples have been taken off around the world and processed. And indeed, the company announced this morning that the tests that the company was undertaking on the spherical graphite, which is the spheronized purified graphite, that's the top end graphite that goes into batteries. The testing has been hugely successful. It's received the ticks in all the relevant boxes. Samples are being supplied from that test sample to Chinese battery manufacturers, and offtake agreements are in place. And Cameron Pearce, the chairman, said this morning, solid progress, building on the initial offtake agreement with the company TIDA, and they expect the final external custom testing and shipping to Asia to take place within a month, and then they can discuss offtake agreements with various other parties throughout Asia. So this is a big step forward. The company is also working locally with their local community. They've refurbished bores and established water supplies for a local school and clinic, a great deal of social involvement. And you see that with a lot of these large-scale projects now throughout Africa. Sovereign Metals is another case in point with the Cassia project. They also are very heavily involved with the local community there. But they're at DFS phase now, definitive feasibility study. So it's now plant design phase, power supply study, and infrastructure development. So the company really is on the home run in that regard. A further 1.9 million was raised in the markets at 5p with several key funding partners, and the fees raised are going to be used also to spend with various partners to progress the project and take it further towards initial production. But this is all at 5p, so there's a real floor at that level. But the simple fact is that with the asset as advanced as it is, with the takeoff projects or the takeoff agreements they already have in place, I'm very surprised that we're still just at 5.5p. But nonetheless, it's a great base to build from, and I think in the next 6 to 8 months, we're going to see a huge amount of progress from Blencowe, which will probably put current price levels into the history books.
So how do they get? What's the relationship? I don't understand. Why this is U.S. International Development Finance Corporation? What's in it for? Can anyone apply for that? It don't have to be American, obviously. It's international, isn't it? How does that work then? What's the relationship there?
Well, quite simply, the relationship is that the grant funding has been provided to Blencowe, but within that there is a takeoff agreement to supply the US. It's well documented that the US is seeking to secure supplies away from China, and it will basically stop receiving supplies from China, I think, by 2026. So there's an imperative in place for the various US departments to secure supplies of raw resources and minerals, critical minerals, from other partners. And this arrangement with Blencowe is one of those examples. That, for example, there's a company called Gold Metal Resources that has the Pilot Mountain tungsten project in Nevada. Again, similar arrangements are progressing there because the race is on now for the US government to source supplies outside of China. So this is how they're going about it.
Yeah, exactly. Okay, what's next, Al?
Okay, so further progress over the past few weeks. Anglesey mining. This is much closer to home and also close to your neck of the woods as well, Just, of course. I know you're a Welshman at heart, but Anglesey Mining is the owner of the historic, and it is very historic, Paris Mountain project. Now, this is a mine that is believed to go back to the Bronze Age. The initial open cast mine is still there in all its glory, and it's been used as film sets, lunar landscapes. It was used in the film called Mortal Kombat out a few years ago. It was at one stage the world's largest copper mine, and at each phase the mine has been progressed. Mining basically stopped there in the 70s, but of late, the current owners have been conducting tests and geological surveys, and they've identified additional zones of mineralization to the north of the old mine. Now, if you go to the mine, I actually went on a field trip there last December. You've got the original the mine head, the big mining gantry that actually sits over the original shaft. Now, to the north and to the east of that, so you've got this new area called the Northern Copper Zone, and from that, drilling work was funded and undertaken earlier this year, and from just the Northern Copper Zone, the company has declared an inferred resource initially of 9.38 million tons, which includes 1.2% copper, zinc, lead, silver, and gold. And then the Garth Daniel zone, which is adjacent to that, which also has similar grades, a slightly better grade of copper. But it's the copper that's the primary focus. And Just, I think you saw this over the past week. There's been a tremendous amount of interest in Anglesey's Paris Mountain project with local TV channels. That's the BBC and ITV in Wales. And indeed, the chief executive, Rob Marsden, was featured on TV. There was interviews. And the company's has last week reached an important milestone in its development. Following these tests, it's submitted an environmental impact assessment scoping report to the North Wales Minerals and Waste Management Planning Authority. Once that is submitted and embedded, the company will then submit a formal planning application. On the basis of the formal planning application being approved, which the company believes it will be successful in achieving that, up to 120 jobs will be created, and there will also be additional jobs created during the construction of the mine and the ramp-up period. Now, bear in mind, there's a lot of infrastructure there already, but of course they will need to sink a new shaft, and further works will need to be undertaken. But it's tremendously exciting. But despite the TV coverage, despite the extensive publicity that the team there have generated, the share price hasn't really moved. It's currently sitting at 1.1p, a market capitalisation of just 5.4 million, which if you visit the infrastructure and see what's there alone, it's ridiculous. It's completely undervalued. There's no reflection of the asset value at all. In addition to that, aside from Paris Mountain, Anglesey also holds nearly 50% of the Grängesberg iron ore project in Sweden, and this is the Grängesberg project has got the potential to become one of Europe's largest individual producers of green iron ore concentrates. The company also has an 11% holding in Labrador Iron Ore Mines in Canada, which is involved in exploration and development of direct shipping iron ore deposits both in Labrador and Quebec in Canada. So the company is hugely undervalued, but I suspect investors are waiting to hear about the formal permit being issued. Also worth noting that as part of this process, once the ore is taken from the ground, it'll then need to be shipped to a port. Now, of course, you've got Holyhead Port. There is an approved route that the trucks with the ore will be taking to Holyhead Port. Also, Holyhead Port, a jetty has been identified as a potential jetty that could be used to load the boats. And I've seen all this. I was there last year, and we were taken around by the management then to examine and have a look at the infrastructure and everything in place. So it's a hugely exciting point for Anglesey, and I think at some stage, hopefully once this planning application is approved, we're going to see the share price start to reflect what is actually there in the ground and also across the asset portfolio of the company.
Yeah. And they said, no, I did see it on the news, and it was a smart young fella there interviewing the CEO. Look at that guy there. Nice tie, button-down shirt. Looking like you are.
That'll be me, Just. Yeah, that's
Yeah.
but it's have a look at that. It's a quick interview, but Rob Marsden, the chief exec, comes across very well there. But it's also worth it. If you follow our Twitter feed, you'll see some of those TV clips featured on the Brand UK Twitter feed as well. So take a look at those.
Marvelous stuff. Thanks, Al. Yeah, it needs to rally, doesn't it? That share price is like trending down a bit. It needs to break up above that. Maybe get above 1.3 would be good if it close above that.
Yeah.
Previous sort of previous support there. This is broken, and now resistance. Marvelous stuff, Al. Thanks for that. And we'll speak to you next week.
Just speak next week.